Ever feel like company financial reports might as well be written in some kind of secret code?
Uh-huh. Yeah, they can be pretty dense.
Well, get ready to crack the code, because today we're tackling one from ICICI Securities.
Major player in the Indian financial markets.
They just released their quarterly report, and we're here to,
Decipher it.
yeah, decipher it and pull out the insights that, you know, actually matter.
That's right. No accounting degree required here.
So we're diving into their performance for the quarter that ended December 31st, 2024. But,
So there's more to these numbers than meets the eye.
okay, so for those of us who aren't, following the Indian markets super closely, give us the rundown. What exactly is it that ICICI Securities does?
So think of them as a one-stop shop for all things finance in India. They're listed on both the National Stock Exchange of India and the BSE, and they handle a bunch of stuff: brokerage services, distribution of financial products, investment banking, advisory services, the whole shebang.
Okay, so they're a pretty big deal. Their latest report, what's the news? Good, bad, or somewhere in between?
Well, the headline is positive profit, both standalone and when you look at the consolidated results.
That's good.
They're in the black for the quarter and for the 9 months leading up to December 31st.
Sounds good. That's got to be, good news for investors.
Yeah.
But where's that profit coming from? What's working well for them?
Their revenue streams are surprisingly diverse.
Okay.
Got their treasury operations, broking and distribution segment, and then there's issuer services and advisory. Each of these kind of contributes to the overall financial picture.
Okay, so let's unpack that a little bit. What jumps out at you when you look at how those different segments are performing?
Well, broking and distribution, that's their bread and butter. That segment alone generated, get this, 43.7 billion rupees in revenue for the 9 months ending December 31st.
Wow.
That's more than double the revenue from all their other segments combined.
Okay, so they're really riding that wave of India's stock market growth, connecting, everyday investors with the right financial products.
Exactly. But it's interesting to note that while issuer services and advisory might seem small in comparison, they brought in 3.7 billion rupees, but it's a very strategic segment for them.
Why is that?
Well, this is where they're helping companies raise capital, potentially guiding them through, mergers and acquisitions. Those deals, while fewer in number, can have a big impact on the bottom line.
Okay, I'm starting to see how each piece of the puzzle fits together. You get that high volume activity, broking and distribution, and then these potentially high impact deals in issuer services and advisory.
And don't forget about the treasury operations.
Right.
That segment brought in about 1.9 billion rupees. And while not as substantial as the others, it's still a significant contributor to their overall revenue.
Now, I've got to ask about a detail that caught my eye in the report. They issued over 1 million new shares to employees this quarter?
Oh, yeah.
What's the story there?
That's a great question. It could signal a few things. Offering employees stock options is a classic way to attract and retain top talent, especially in a competitive market.
Right, like, come join us, be part of our success.
Exactly. And in a field like finance, where skilled employees are in high demand, this can be a powerful incentive, aligns employee interests with the company's performance.
So, potential win-win. Makes sense. Now, there's one more piece of this puzzle that we can't ignore.
Oh, yeah.
The elephant in the room, right?
Yeah.
The proposed merger with ICICI Bank. This has been making headlines for a while.
Absolutely. It's a major development. If it goes through, ICICI Securities, as a publicly traded company, would cease to exist. It would become part of the much larger ICICI Bank.
That's a huge shift. What would that mean for investors who currently hold ICICI Securities shares?
Well, it depends on the final terms of the merger. The current plan is for ICICI Bank to issue its own shares to public shareholders of ICICI Securities, essentially a buyout.
Okay, so if you own shares in ICICI Securities, you'd end up with shares in ICICI Bank instead. But I remember there's been some pushback against the merger.
You're right. Some shareholders are appealing the merger, even though the National Company Law Tribunal in Mumbai gave it the green light back in August 2024.
So the whole thing is kind of in limbo. What are the chances this deal actually goes through? And what happens if it doesn't?
Those are the million-dollar questions.
Yeah.
And those are the questions that we will delve into in Part 2. We'll examine the potential implications for investors on both sides of this deal. Stay tuned.
All right. So we've talked about their diverse revenue streams.
Yeah.
And that, intriguing employee stock option move. But to really get a feel for their financial health, we need to go a little bit deeper.
Absolutely. It's time to look under the hood, so to speak,
Yeah.
and examine some key financial ratios.
All right, walk me through this. What are the vital signs we should be checking?
Well, let's start with the debt-to-equity ratio. This basically tells us how much debt a company is using to finance its assets compared to, the equity held by shareholders.
So a higher ratio means they're leaning more heavily on borrowed money.
Right.
What's the story for ICICI Securities?
Okay, so for the 9 months leading up to December 31st, 2024, their debt-to-equity ratio stands at 4.72.
Okay.
Now, if we compare that to their ratio at the end of March 2024, which is 4.25, we see it's gone up a bit.
Is that cause for concern? What constitutes like a healthy debt-to-equity ratio?
It really depends on the industry and the company's overall strategy.
Right.
For financial services companies in India, a debt-to-equity ratio around 5 is often considered acceptable. Of course, higher ratios come with higher risk.
Right. So while they're still within what's considered an acceptable range, that upward trend is something to keep an eye on.
Yeah, definitely.
What other ratios should we be looking at?
Well, operating margin is another important one.
Okay.
This tells us how much profit a company generates for every rupee of revenue.
Okay. After covering their variable costs, things like wages, cost of materials, that kind of stuff.
So the higher the operating margin, the better, right?
Generally, yes. A healthy operating margin suggests the company is running efficiently.
Okay.
In ICICI Securities' case, their operating margin for the 9 months is 42.47%.
Okay.
That's a bit lower than the 45.11% they achieved for the year ending March 31st, 2024.
A slight dip.
Yeah.
Is that something to worry about?
Well, it's not a drastic change, but it's worth noting.
Okay.
It could be due to various factors,
Right.
including increased competition or rising operating costs.
Yes.
Further analysis would be needed to really understand the full picture.
Let's move on to the bottom line. Net profit margin.
Yeah.
That's the real indicator of profitability, right?
Exactly. Net profit margin factors in all expenses, including taxes and interest payments.
Okay.
For the 9 months ending December 31st, ICICI Securities' net profit margin sits at 31.63%.
Okay.
This is also slightly down from the 33.60% they reported for the year ending March 31st, 2024. Okay, so we've seen a slight increase in their debt-to-equity ratio and a slight decrease in both operating and net profit margins. What's the takeaway here? Is this a sign of trouble brewing?
Not necessarily. Remember, we're looking at snapshots in time.
Right.
It's the trend over a longer period that matters most. It's also crucial to compare these numbers to industry averages and their competitors.
You're right, it's all about context.
Yeah.
Speaking of context, let's circle back to that proposed merger with ICICI Bank.
Right.
It's clearly a major factor in their future.
Absolutely. This potential merger, it's been a long and winding road. Back in June 2023, the board approved this deal. The idea is for ICICI Bank, which is already a giant in the Indian financial sector, to basically absorb ICICI Securities, making them even larger.
So for investors who hold shares in ICICI Securities, what happens if this goes through?
Well, they would receive shares of ICICI in exchange for their ICICI Securities shares.
Okay.
The exact ratio would depend on the final terms of the deal, of course.
But as we mentioned earlier, this isn't a done deal.
Right.
There are shareholders who are challenging the merger, even though the National Company Law Tribunal in Mumbai gave its approval back in August 2024.
Right. So the whole thing is in a kind of legal limbo.
Yeah.
And this uncertainty is undoubtedly weighing on ICICI Securities' performance and potentially impacting investor confidence.
So what are the potential scenarios here? If the appeals are successful, what happens?
Well, it could force the companies back to the negotiating table,
Okay.
potentially leading to a revised deal or even scrapping the merger altogether.
And if the merger does go through, what are the implications for investors, both those in ICICI Securities and those in ICICI Bank?
Well, that's what we'll analyze in Part 3. We'll look at the potential benefits and risks for both sets of investors and consider the broader impact on the competitive landscape of the Indian financial services industry.
Okay, so we've covered a lot of ground,
Yeah.
from their diverse revenue streams to their key financial ratios.
Mm-hmm.
And that looming question mark, the potential merger
Right.
with ICICI Bank.
Absolutely.
So now it's time to address the elephant in the room.
Yeah.
What happens if the merger actually goes through?
Right.
Let's start with the investors.
Okay.
What are the potential, benefits and risks for those who currently hold shares in ICICI Securities?
Well, for ICICI Securities shareholders, the merger could offer a chance to become part of a much larger and more established financial institution, right?
Yeah.
ICICI Bank has, broader reach,
Yeah.
a more diversified portfolio, a stronger track
So
record.
increased stability and potentially, greater growth potential.
Exactly.
On the flip side, though, there's also the risk that the share exchange ratio might not fully reflect the true value of ICI securities.
Right.
Some shareholders, argue that the current offer undervalues their holdings.
Yeah, and that's where those ongoing appeals come into play, right?
Yeah.
They're hoping for a better deal.
Yeah, they're pushing for a revised, share exchange ratio that reflects what they perceive as the fair value. Now, what about the impact on ICICI Bank and its investors? Is this a win-win for them as well?
Well, for ICICI Bank, absorbing ICICI Securities could really strengthen their presence in the retail brokerage and investment banking sectors.
Mm,
It would give them access to a larger customer base and a wider range of financial products to offer.
okay, so they're looking to, expand their market share and potentially boost their profitability.
Exactly.
But what are the potential downsides?
Well, integrating a company of ICICI security size, it's no small feat.
Right.
There's always the risk of cultural clashes, operational hiccups, and unforeseen expenses during that whole merger process.
Right. It's not as simple as just like adding two companies together on a spreadsheet.
No, absolutely not.
There are complexities and potential challenges to navigate.
Yeah, and let's not forget about the potential impact on competition within the Indian financial services sector. A larger ICICI bank could lead to reduced competition, which might not be beneficial for consumers in the long run.
That's a crucial point.
Yeah.
This merger raises broader questions about market dynamics and the balance of power within the industry.
Exactly. It's not just about the numbers on a balance sheet.
Right.
It's about understanding the potential ripple effects across that whole financial ecosystem.
So for those who are watching this unfold, what are the key takeaways? What should investors be paying attention to?
Well, first and foremost, the outcome of those shareholder appeals is critical.
Yeah.
The final terms of the merger, if it proceeds, will have a significant impact on the value of both ICICI Securities and ICICI Bank shares.
It's all about those final details.
Yeah, and second, it's essential to monitor how the integration process unfolds should the merger actually go through.
Right.
Smooth integration is key to realizing the potential benefits of the deal.
And finally.
Keep an eye on the broader competitive landscape, how other players in the Indian financial services sector respond to this potential merger.
Yeah, it'll be fascinating to watch.
Definitely.
So as we wrap up this deep dive into ICICI Securities,
Yeah.
it's clear they're at a pivotal moment.
Yeah, they are.
Their financial performance is solid,
Mm-hmm.
but that looming merger adds a layer of complexity and uncertainty.
It's a reminder that the financial world is constantly in flux, right?
Yeah.
Staying informed, critically evaluating information, considering multiple perspectives, those are essential for navigating these ever-changing waters.
And that's what the deep dive is all about.
Absolutely.
We equip you with the knowledge and insights to draw your own conclusions. Now it's up to you to continue exploring this fascinating world of finance.